Hey there, and welcome to our South Florida Real Estate Market Update. We're excited to be able to share some valuable insights and updates with you and the best timing for your entry into the market. And we're going to talk about both this year and the rest of this year and well into next year. So folks, throughout the video, we'll be discussing current trends, market projections, market conditions, and various factors that could potentially impact the real estate market in the years to come. So let's go ahead and get started. Folks, the housing market in South Florida is expected to stay healthy and overall a seller's market with inventory supplies averaging between 2 and 4 months. Now, that's kind of really important from the standpoint of kind of identifying how the market looks. Typically, when the inventory is between 2 and 4 months, it's considered a seller's market. 4 to 6 months is considered a balanced market, okay? And then if it's more than 6 months, it's considered a buyer's market. And what that really means is that means the availability of properties for sale, okay, as a function of how many buyers are coming in and how long the properties can expected to sit on the market. And this is despite the challenges that have been posed by the increase in interest rates, the increase in insurance costs, and really kind of the market has really kind of shown its resiliency through all of this. Now, one thing of note in the state of Florida, I mean, you're going kind of moving outside of the South Florida, the cities of Miami, Tampa, and Orlando, they're kind of set to lead the way in Florida's real estate market. So, it's basically, Tampa is kind of taking the lead on the West Coast. Orlando is kind of heading up the centerpiece of the state. And Miami, the greater Miami area, which is basically what we are, is kind of taking a look at taking the southeast piece of it. There's not a whole lot of activity going on up in the Panhandle at this point, from what we can see. But if you have questions about that, please feel free to reach out and let us know. We can certainly reach out to some of our colleagues and find out what's going on if you're interested in doing something in the Panhandle. What does this really mean? Okay, what this really means is that the cost of home ownership has gone up quite a bit, and it's making it harder for people who are looking to buy to get into their home, especially if you're a first-time home buyer. So, and one of the biggest problems really comes down to, as we pointed out, the inventory is only about 2 to 4 months worth of inventory available for homes here in the South Florida area. So what that really means is that there's not enough homes to go around for all of the people who want to buy. And what that really kind of comes down to, it really leads to a little bit of inflation, or if you really want to get technical about it, possibly a little overinflation of the values and the prices of the housing of homes down here in the Fort Lauderdale area, and especially in the entire South Florida area. You're going to see this probably more in the single-family home area than you will in the condos, and to a little lesser degree into townhomes and villas. But predominantly, you'll see a lot of this in the single-family homes. So now, folks, as we look into the immediate future, we may see a little bit of a slowdown. We really don't know kind of what's going on with the Fed meeting later on this month. We really don't know what's going on with the current administration, and we'll get more into that a little bit later into the video. There are a number of things that could play very heavily into the availability of homes in this properties in this market. One of them is obviously the interest rates. The other one is basically, from the standpoint of how the properties are priced. Because remember, everybody who's basically selling a home is going to be looking for a home to buy, unless they're going to be moving out of the area, in which case we're still seeing a lot of folks that are doing basically in this area moving, this kind of local moving. They're either moving up, upscaling if they have a family and need something a little bit larger, or in the case of where the family has already grown, that basically they're going to downscale a little bit, and maybe moving from a single family home into a villa, or possibly even into a condo. So to kind of sum it up, I mean, the housing market is actually looking very good in South Florida for the next 6 months, and that's kind of, like I said, that's kind of in spite of the kind of fluctuating interest rates, and again, some of the concern and some of the, for lack of a better term, irritation, if you will, that has been caused with the current insurance rates, the increase in insurance rates, and of course we've always got to bring in the third leg of the table is, of course, the real estate taxes that come in, because the higher the price of the property when you purchase it, the higher the real estate taxes are going to be. So what are the predictions basically for the next 6 to 12 months? Well, actually there's not a whole heck of a lot of change from the first 6 months going out into a year. What we're seeing is it's expected to remain relatively strong. South Florida is one of those areas that I don't want to call it recession proof, because that everybody will point to me and say, well, what the hell happened in 2008? But because of the variety of property options available from the standpoint of whether you're going to primary residence, whether it's going to be a second home, a vacation residence, whether it's going to be an investment property, is it going to be an investment home, is it going to be an investment condo, is it a short-term rental, is it a long-term rental, are you looking to purchase multifamily units like duplexes, triplexes, and quadplexes? There's a whole lot of different options available. So, so South Florida has a way of kind of moderating all this stuff, and if you want to call it, think of it as basically real estate arbitrage, if you will, where there's always a way to kind of find the best thing that you're looking for. We have folks that have come down looking for condos and that end up finding out that hey, a great idea for them, because they're not going to be down here all the time, is to look at a duplex or a triplex where they can basically live in one of the units, okay, and they can rent the other unit or the other couple units out and basically cover all their costs. So there are a lot of different options that are available. So that's one of the things that kind of keeps the real estate market here in South Florida relatively strong. The other thing that's really that's contributing to kind of the strong market, and this actually a little bit leaning towards market stabilization, okay, is the population growth in this region. Now, we are nowhere close to where we were as far as folks coming in, in 2020 and 2021 and even early 2022 as a result of the pandemic and everything that happened, and where folks they were told that they could work from home. And it's always a whole heck of a lot easier, especially in January and February, to work from home when you're working from home, looking at the beach, or if you're sitting on the beach and it's 80 degrees, and basically when you're sitting up in New York City where it's minus 40 degrees and you've just shoveled 3.5 inches of partly cloudy off your driveway. So the population growth in the region has been the primary driver for the rising housing costs. More and more folks are coming in, and we're just not seeing that inventory catching up that quickly to the number of folks that are coming in. Okay, I mean, but Florida it's still number 2 behind Texas, but we're starting to see a lot of influx coming into areas like Arkansas, North Carolina, Tennessee are starting to really, really pick up. As a matter of fact, we have some very good friends and a client who basically just relocated to Tennessee, and I mean, it took them basically, they really, really had to crack down really quickly and move really quickly for property up in Tennessee. So while it is going strong here in South Florida, there are other parts of the country that are also lending into keeping real estate a good investment and a good opportunity. One of the other things that's going to kind of lead to the kind of a healthy market, if you will, and it's kind of going towards a rationalization of things, if you will, also, is kind of the interest rates and the borrowing costs. So, I mean, in addition to seeing higher interest rates, I mean, we've seen interest rates go from 3.02 back in December of 2021, all the way up to over 7%. I think we hit 7% a couple of weeks ago in August of 2023. So that's a significant increase. And that's going to basically, that in conjunction with a little lower inventory, with a higher seller expectation of what they're going to get, makes it a little bit more difficult. So there are it's still remaining somewhat of a seller's market. But the other thing is that folks are still coming down to South Florida. They're still seeing that the cost of living in areas like New York City, Chicago, we're seeing folks coming in from Cali right and left. We have folks coming in from LA, from Sacramento, from San Francisco, from San Diego. They're just coming in. It's just the cost of living is so much higher up there. Now keep in mind, one of the things that Florida has going for it, South Florida gets to benefit from this, is the fact that there are no state income taxes on money that you earn and on your retirement. So you don't pay any state income tax on that. That gives Florida a huge leg up on a lot of other that charge a state income tax. It also makes things a lot easier for folks to be able to afford the property that they're looking for. So, basically what we're seeing is that from an interest rate perspective, we believe that interest rates through the end of 2023, maybe into the first half of 2024, are going to still sit somewhere between the 6 and 6.5% range. And you can always buy that down a little bit. You can talk to your lender about how you do that, and you can buy it down. And this is looking at it from the standpoint of 30-year fix. So if you're a little less risk adverse, maybe you look at doing an ARM, or maybe you look at doing some of the other programs, reach out to us, let us know. We can definitely hook you up with some great lenders that we work with. We think that the real estate market is going to remain relatively strong throughout most of 2024, relative to the entire nation. It's just kind of overall, we're kind of looking at it from the perspective of, South Florida real estate market, we were kind of looking for that stabilization or that rationalization that we were kind of hoping was going to go on. And, I think the threat of a recession, if you will, kind of delayed that a little bit. Certainly the fluctuation we've seen in the inflation rates are changing it a little bit. I mean, there's still a lot of folks that, depending upon which of the pundits and which of the analysts you listen to, some folks are saying that, basically it costs an additional $700 a month to get what you could get a year ago. I don't really know how that's calculated and whatnot. I'm more than happy to look it up for folks if you're truly interested. But it's just one of the things that I know that properties that folks could qualify for a year and a half ago, that basically because of the increase in interest rates and the increase of cost of borrowing, they just can't qualify for those anymore. So it is going to create a little bit of a challenge going into. We're not going to have those 3% interest rates where you can basically qualify for almost anything. These are the kind of things that are going to both impact your ability to purchase homes, but it's also going to kind of impact the overall performance of the market. So folks, kind of what are we looking like 18 to 36 months out, okay? And for a lot of folks, and I know what you're saying, for most folks it's basically kind of a wet finger in the air, but we're going to go ahead and do our best to kind of tell everybody tell you what we're seeing and kind of what we're hearing from some of our colleagues, some of our analysts, and some of the folks that we rely on to give us the data so that we can provide the best information out to our clients and our prospective clients. So what we are going to see is that we're looking for the stabilization, if you will, of the real estate market that many folks about a couple years ago were forecasting for the late 2022, early 2023 timeframe. We're looking to finally see that kind of coming in, late 2023 and maybe even early 2024 throughout 2024. So it's going to be a little while. Now, there are a couple of things that kind of throw a little monkey wrench in there. One of them is certainly that 2024 being an election year. There's a lot of things that are going on, and the stock market responds to what the polls say today and what the poll said yesterday, what the poll may say tomorrow, and who's expected to win and who's expected not to win and who's going to do what. We look at those as kind of fluctuations and blips. We do see that, that basically as we kind of get further into 2024 and looking out into 2025, we'll see that stabilization, that kind of the rationalization that folks have been looking for. Now in South Florida, historically it's been a buyer's market. There's always been a few things more available to sell than there have been buyers. I mean, and it would, especially on the condo side of the house. So there's always, folks that are willing to sell their condos. And so there's always been something of a little bit of a buyer's market, but we are looking to see the kind of the leverage and the stabilization out to what we call a balanced market coming up, late into mid 2024 and late into early 2025. So, and again, I mean, the one thing that's important about this is that what part of the stabilization takes into consideration, okay, it also talks about a stabilization of prices. Now, we don't see prices falling. We just kind of see prices moderating and prices kind of coming back to where they should be, based upon being in a balanced market. 2 years ago, it was a strong seller's market. You could ask whatever you wanted. I mean, you would get 3, 4, 5, sometimes 6 offers, and half of them would be almost half again as much as you were asking, just so the buyers can get in. We're not going to see that. So for sellers that are expecting that, I'm just going to kind of let you know up front, that's not going to happen. We don't see that occurring. What we do see is that if your property is properly priced and it's properly marketed and it's set out in such a way that it distinguishes itself, that basically you're going to get a lot of activity going on. That market will stabilize and people will start to take into consideration interest rates, kind of where they're at. Now, I hear everybody kind of, wringing their hands in the air about the interest rates. Folks, when I bought my first place, the interest rates were 14%. So, look, to me, even 7% is still looking a whole heck of a lot better than it is when I started in, my long journey into real estate ownership and real estate investment. Now, depending upon who you talk to, and if you listen to some of the pundits out there, the other thing that could actually have an impact on this is that there's still this little looming thing called recession out there. Now, I know that the Fed's trying to do their best they can, and all the different analysts are saying this and saying that, whatever else, but if there actually is, the recession actually becomes something more than basically just a shadow that everybody sees every once in a while, maybe the same thing, like in February, like you see for the groundhog, becomes more than that, okay, then that could also impact what's going on, because real estate does have a tendency, even here in South Florida, it can take a little bit of a hit, if we do come into a strong recession. So, folks, to kind of summarize the markets from the next 6 months, all the way up to the next 36 months, basically. So our real estate market in South Florida is expected to remain strong, for the foreseeable future. We have taken into consideration some of the key components like the interest rate and the cost of the insurance and the increase in real estate taxes and the overall cost of borrowing. But because there is an influx of people coming in, of folks coming into the South Florida area, because businesses are continuing to come down to Florida and to the South Florida area because of advantageous tax reasons, we do see that there is still going to be a very, very strong economy and subsequently a very strong population to kind of support what's going on in the real estate market. So we kind of talked a little bit about some of the factors that could impact the market. in the South Florida real estate market, both in the short term and the long term. So, but I wanted to just kind of go into that, dig into that a little bit deeper. I know we kind of glossed over it a little bit. So, there are factors, as far as job growth. There's factors like income levels that are coming through. Interest rates obviously play a significant role, in housing prices. So does the cost of borrowing. But again, some of those economic factors, like job growth. I mean, the economy in what we call the Treasure Coast, which is essentially Palm Beach County, Broward County, and Miami-Dade County, the economy in South Florida is very, very strong. The unemployment is very, very low. It's currently sitting between 2.2 and 2.3%, which I think is basically just a little bit below the actual adjusted national average. So it's a very strong economy. We're seeing a lot of industries and a lot of businesses coming down to the South Florida area, not just because of the tax advantages, but because they're seeing that folks want to come down here and want to come down here to the South Florida area, and they want to come into the Broward County, Miami-Dade County, and Palm Beach County areas, because folks want to come down and they want to live here. They want to be able to have a little bit of a lifestyle that kind of goes along with their life, if you will. Those economic trends we're expecting to consider. I mean, we are seeing companies like JM Family. We're seeing companies like Staples, like Office Depot, like Citrix that are coming down. We're seeing a huge growth in the financial services industry. Basically, every major bank has a significant presence in either Miami-Dade, Broward, or Palm Beach County. We're also seeing significant growth in the tech sector. Miami is becoming basically a hub for companies that are coming down to basically do data warehousing and data storage. Hotwire has a huge co-location facility that's come in out of Miami, and they're really making inroads into the cable and internet market. So I mean, you're seeing a lot of these things that are driving the trends, and these companies are coming down here because people are here, and because money is here, and because the industry and the growth are here. And again, this trend in this economy is expected to remain robust and continue to grow. Now, again, even with the stabilization of what's going on, okay, even if it begins to kind of moderate a little bit, we're still looking at seeing strong growth trends for the foreseeable future here in South Florida. So a lot of folks have come back and said, Kev, this is great, okay, and we certainly appreciate you telling all this great, wonderful stuff about the housing market, but basically, I'm not really ready to make a full-time move down to the South Florida area. Or, we've seen a lot of folks that are asking us about investing in property in the South Florida area. Now, we put up a number of videos about real estate investing, whether it's buying condos, long-term rentals, short-term rentals, investing in multifamily units, duplexes, triplexes, quadplexes, oh my, everything. So what we're seeing is that there are some things that could impact. The current administration is looking at proposing some tax changes that could really significantly impact the desirability of investing in real estate, not just in the South Florida area, but basically anywhere in Florida, and and depending upon kind of what happens, it could be anywhere in the United States. One of the things that they're talking about doing is increasing the capital gains tax from 20% to 39.6%. Folks, I mean, that's a 100% increase. That's going to make a significant impact on the taxability and what people will end up walking away with, when they sell their investments, especially for anybody earning more than $1 million. And nowadays, that's really not that difficult to do when you figure out if you sell a multifamily unit, or you sell a big property in an area like New York City or Chicago or LA or San Francisco or San Diego. I mean, hell, even in San Diego, some of our friends have told us that 2 and 3 bedroom condos run well over $1 million. So that's not very, very difficult to think. It's not a very difficult target to hit. The other thing is I've been talking about making changes on a 1031 exchanges. Now, for those of you that don't know, and I'm not going to go into a whole lot of detail because I'm not a tax professional, but basically a 1031 exchange is when you basically exchange of like assets. So if you had a property that you were using as an investment property, and you want to go ahead and change that and get rid of that property. If you want to liquidate that property, you want to stave off paying any type of taxes on it, then you want to go back and make sure that you're buying a like kind property again. It could be going from a rental property into maybe it's a large rental home. Maybe you've rented out a big property up in New Jersey, for example, and you're getting, it's $1 million property. Then you come down to South Florida and you look at picking up a duplex or a triplex, for roughly the same price. I mean, it's a like kind exchange. They're looking at changing some of the laws around how the 1031 exchanges are handled, and also how investors can defer the gains and the capital gains on the 1030 on the sale of those properties. So the other thing they're talking about is limiting the amount of money that can be deferred through the 1031s. You know, they're basically trying to limit to $500,000 for a single taxpayer or $1 million for married taxpayers or taxpayers filing jointly. These are things that are going to have a significant impact on the decision that you're going to make as to whether or not you want to either invest in real estate in the South Florida area, or if you really want to invest in real estate at all. Now, again, these are only things that have been talked about. There's nothing hard and fast that have been put in there, but these are things that you need to take into consideration. This is the kind of information that you get from experts like my team and I when we sit down and talk to you about what your goals and your objectives are in investing in real estate in the South Florida area and in the South Florida market. You know, so folks, investing in real estate in South Florida can be a profitable venture for those that do their research, you know, and manage their properties effectively and make sure they manage your expectations. Okay, that's why my team and I are here to assist you in any way that we can. So please, you know, let us work with us. Let us help you make that journey a success. Give us a call, send us a text, give us a little email. You know, click on the Calendly link. We'll talk to you spend 40 to 45 minutes talking to you about anything that anything that's of interest. So, you know, so basically just go ahead and click on the link. Give us a call. Look forward to hearing from you.